All right, you guys ready? You guys ready? Class.
Yeah.
Let's try again. Luke. What's up? What's up? Okay. All right, so let's go ahead and take a look at this. So now, your notes. So for all those people that are paying attention, because some people are going to screw this up right now, what page is this going to be on?
5, 7.
7.
You were just messing with us, right?
Yeah.
Okay. So this is page number 7. So you're going to make sure you write 7 on this. Now, the homework is going to be on which page? Page 6. Page 6. Okay? Super important. So you guys know, so you don't forget where it goes. So when I collect the notebook, it's going to be in the right spots. Income tax. So if you are into watching news and political things, all these things are actually like a big topic currently right now because of inflation. So, income tax. So as we're going over this, I'm going to do my best to try and explain as much as I can. I am not an expert. I'm a math teacher. I'm a math teacher that understands some of this stuff, and so that's why I wanted you to get a baseline first of what the economics is. So, income tax is a percentage of your income collected by the government to fund its services and programs. So, your income tax, so you get, it's a portion of your paycheck goes straight to the government. Okay. Determining taxable income. Calculating your federal income tax begins with gross income. Now, I got a joke to go along with this, so you will not forget it. So, gross income is how much money you actually make. Because we had someone in here said they make $15 an hour. So it's $15 times how many hours that they work. So the reason why that's gross is because you don't bring home that much money.
Yeah.
There's a big chunk of money that's taken out. So it's gross how much money that they take out. They take it away. So your gross income is before taxes. It's gross to see how much taxes take out. Come on, that's supposed to be funny. I'm hoping you guys, because everyone actually forgets the difference between gross and net.
Dude, we have open mic night coming up.
Oh man. Okay.
Okay.
So, listen.
So you can pay $14.
Now, gross is the amount of money that they have, that you have before taxes taken out. That's important. Total income for the year includes income from wages, tips, hint, hint, interest, dividends from investments, unemployment compensation, profits from a business, rental income, and even game show winnings. All right, so you guys might remember this. So one of the big issues that came up recently about that, you guys remember Oprah
Yep.
going on there? You win a car, you win a car, you win a car. Guess what she just did at that point? That was a $40,000 car that she gave away, which is considered winnings. And so it's taxed at a higher percentage. So from that, everyone had to pay about $18,000
A lot of people.
in taxes on that.
That's great.
The people that received the cards.
Yeah, they often just sold them because there was no point, they couldn't afford them.
Yeah, you can't afford it. Seriously, no one could come out their pocket and be like, oh, hey, yeah, great, $18,000. So guess what happened to almost all those cars? Most people
Sold them.
at cost just to pay for. They didn't really make any money off of it because it's now a used car. Yeah.
So it's not even winning at that point. Like you just what?
Yep.
Yeah, a lot of, like, with cars, they lose value the second you drive them off the lot, and the fact that, like, she had to, like, give all those cars out, she ruined the value, meaning that they couldn't gain anything, so they ended up paying for the car.
That was basically it. So,
Gee, that shit drives. Like what?
but
But you can't pay for the insurance because it's a brand new car. You can't pay for the gas because inflation. You can't pay for anything because it requires.
It wasn't the inflation back then though, but it was just the tax bill that got them. Can you come out look, I'm gonna give you a $40,000 car. Can you come out your pocket right now to keep that car of $18,000? No. Most people can't do that.
And if you win a house, is it worse?
Yes.
House,
Property
wait,
tax.
Way worse, bro.
Bills.
Like how?
if you win the lottery,
Yes. Oh, I know they take like.
They
take
take
a ton of money.
40%.
they take something like 42%.
Yeah.
If you win $1 million in the lottery,
You get
You get
600K.
okay, no. It's not 600K because it's 42%.
You're getting like 200.
No, okay,
Great.
it's 38. 380,000 if you won $1 million in the lottery.
Not a crap right here.
What?
Taxes.
420K plus the charitable tax that they require.
It wasn't sure.
Because they required you, they require
It,
you
no,
to make,
it was 42%.
and then they require you to make a donation to charity.
So either way, you're not coming close to $1 million.
Ever.
So that's important because guess what? This is also on some of our homework problems here that actually has this included. All right. So such as cars or vacations. So that's why I brought that one up. Determining taxable income. The next step in calculating your federal income tax is determining your adjusted gross income. So, adjusted gross. So first, what was gross?
Before taxes.
Before taxes, right? All that money that you made, all it added up. Adjusted gross is figured by taking gross income and subtracting certain allowable amounts called adjustments. Untaxed portions of gross income include contributions to certain retirement accounts and tax-deferred savings plan, interest paid on student loans, okay, this goes for something we're talking about later, self-employment costs in a traditional tax-deferred retirement plan. Okay, you deduct the full amount of your contribution from your gross income, you pay taxes on the money later. So, if I were to put it into one of these IRAs or these tax savings plans, I don't pay tax on it today. When I pull it out later on, I will have to take taxes out there. And sometimes if you don't wait long enough, they give you taxes and a penalty. So even though that is your money, you are penalized for taking it out too soon.
Does the tax that like you start with stay the same as the tax like as you get taxed later, or is it like
You're taxed on the new.
Okay, so
So whatever current tax rate is right now,
that's what
10%. Later on in the future, you're taxed on that percent.
instead of the 10.
Yeah.
And then do you still get the like interest rate or not the interest rate, the growth rate for when you have your money sitting in the account?
Whatever interest you make on that account, they're saying all of it is untaxed so far, but when you start pulling out, all of it is taxed on the whatever rate when you pull it out.
So
You'll like this, all right?
what's good about it?
Huh? Because you're putting money away. So right now I have money away for my retirement.
Right.
So I'm putting money away for my retirement. So what's going to happen is, right now, money, if I put $500 a month away, how much is that in 1 year?
500 a month.
6,000. It's 6,000 a year. Okay, so after 1 year, there's this stuff called interest. If I'm doing it with the bank or doing it like some type of mutual fund, I can get up to 10% interest on that. So what I'm going to do is, and every year that money sits in there, it grows. So it's not 6,000 and 6,000 next year.
It's gonna be more.
It's what I had the original amount. I'm going to get interest on that, and as it goes, I'm going to get more interest on that. So it grows exponentially as you go in there. as money goes in. We'll talk about that later when we go into compound interest.
Is it a like set interest rate or is it like?
Depends.
a growth?
If you have a market, if you have a CD, depends. So everything depends on interest rates. Okay, so this self-employment cost additional transferred, okay, so when you pay taxes on the money later, when you draw it at retirement. So determine taxable income computed. Adjusted gross income equals gross income minus adjustments. Okay, it's almost like there's a formula there. And in that formula there, you might want to freaking put the damn phone away so I don't have to keep the same thing over again. Yes, I just bleeped myself. Thank you. I already told you this is going to be difficult because you have to identify what each item is when we're calculating this. That's what it's important. So, gross income minus adjustments. So this is the problem right here on this one. So standard deduction is a lump sum amount that you can subtract from your adjusted gross income. The IRS sets this amount. Most young people take the standard deduction because their financial situation are relatively simple and they're not eligible for numerous deductions associated with owning a home or making charitable contributions. When we filled out the W-2s, remember when we said, just put 0 in this category? That's the standard deduction. That's why when you do your W-2 that I had you guys fill out, you're going to have standard deduction. No, it was W-4, wasn't it? Yeah, W-4. Sorry, I said W-2. Okay. Standard deductions. Because I already know everyone doesn't have investments and rental property, you're still in high school. Okay, so now this one right here, where it doesn't really say this in the notes very well, I want you to add this. Or. Itemized deductions are deductions you list separately if you have incurred a large number of deductible expenses. Itemized deductions include interest on home mortgages, state income taxes, property taxes, charitable contributions, medical expenses exceeding 7.5% of adjustable gross income. That one's super important right there. Because you're going to have to do some math on that one because we have a couple of these in the homework like this. Taxpayers should choose greater of a standard deduction or itemized. So for adjustment, you're going to do this or this. This or this. Whichever is greater. So when you're doing this, you want your taxable income to be small. You want your taxable income to be smaller. You don't want it to be bigger. Because if it's bigger, you have to pay more taxes. That's why there's this adjustment.
That's what I didn't understand. Like, when they make you, when I applied for my job, like they made me do that, and they said that if you choose like the highest one, you get paid more, but then you gotta pay taxes. You gotta pay a lot more taxes. So I chose in the between. Yeah. Like in
For the deductions, like your Arizona tax rate thing?
Yeah.
Yeah.
Okay, so I highly recommend
Yeah,
Okay.
because I didn't know that at first.
go the most.
That's why.
I have mine set at 3.5.
I can change it.
Yeah, 3.5? Fine. Okay, so what that is it takes 3.5% of your federal income tax and it puts it away for state. Currently, state is less than federal. So almost every year for the past 5 years, I've owed on federal, but I got a check back from state. So you don't want to, because I have a very complicated set of taxes, I pay someone like $600 a year to do my taxes for me. Okay, it's not easy. So I gladly pay someone else to do it. But because if you do it yourself and you get it wrong, you could go to jail.
They won't take you immediately, but
Are you kidding? You know that they just hired 87,000 new IRS agents.
but as a first time tax
Yeah, I know.
filer,
I know, but I'm just saying in general.
like
You
get
don't
one-
want to make that,
We're just gonna
because what
we don't
happens,
even have a job.
Tony, pay attention.
Um,
Okay, what happens is, they don't get you the first time.
They'll wait till you.
They don't get you the second time. Maybe third time.
But wait until it gets.
But when they actually do get you, they do this thing called an audit. They go back through all your previous years' taxes for the last 10 years, fine tooth comb, anything that they say, and you have to produce receipts for all these things. Anything that they say you owe, that's a huge chunk of money you're now gonna owe. You can't really fight it, because you might have made a mistake on one of these earlier, and you've been making that same mistake for a couple years. You owe that money plus interest.
That's a lot. Oh, that's
And that's what I'm saying. You don't want to make mistakes on these things. And that's why, again, I do pay people to do mine. But you being students, I will show you how to do yours, because you're not going to have an itemized deduction.
Can you just wait till I come back?
You're going to do, huh?
Babington too.
You're going to do the 1040 EZ for taxes, which doesn't have. So you're going to have a standard deduction. I do itemized because we have medical, we have mortgages, we have state income taxes, property taxes, charitable contributions, and again, medical stuff.
What about like side hustles?
Huh?
What about side hustles?
You have to pay taxes on every job you have.
for-
I have 3 side hustles.
Even if it's
Are they
not
all
like,
self-employed?
even if it's not on paper? Like, if it's
They
not a
have to
real
be on
job.
paper.
Did you just
Okay.
you locked up, buddy?
So you know I'm recording this, right?
Oh.
Okay. So
He's definitely.
someone's going to jail soon. Okay.
Definitely a scam.
Now listen. Okay, you know the meme that come out recently about the IRS coming after you because you send your grandma $600?
Yeah.
Okay, but the federal government loses, was it like $40 billion worth of weapons, machinery in Afghanistan? They just like left it there. Yeah, but they're gonna come after you
For
giving your grandma $600 because grandma has to pay and count that as income.
That's not income.
That's whack.
It is.
It is.
is.
Every month.
It does count, even if it's just a one-time thing.
It's actually a question on the FAFSA.
Have you ever received money from grandma?
Yeah.
It's like have you ever received income from anybody that's not your like legal guardian?
Someone cash out you $50.
Yeah.
Don't look at
They
me.
go and look at your bank account and see that transaction happened. You have a bunch of those transactions happening. They're going to go and you have to justify every single one of those things. And that's what I'm saying. Okay? You have to claim this, especially side hustles. Side hustles here. Okay? I have a couple hustles. I have a business license for my other hustle.
What is it?
An actual business license. So to actually make
You
money.
get a business license.
Yeah, and so you have to pay extra money every month just for the permission for a side hustle.
Well,
So
my dad's
I'm
been
telling
running
you.
his business for the last like 15 years without.
Okay,
a
so
business
when
license.
you're pimping, just so you know, they will get you on that cash if you use Zelle or Cash App you some money.
Well, Chase Bank.
Exactly.
This is
This
depressing.
is depressing.
No, like,
But-
like here
How do you
on
get
it,
rich?
it's like,
But you didn't know this?
Like, this is a lie.
I'm glad that I am able to actually start open your eyes and actually seeing you pay taxes and you have to actually claim all these things.
I need to leave.
That was it. You're like, I'm done. You're all right. Hey, explosion right there.
I'm quitting the United States.
Okay, yeah. So, if you want to do your own business, you can.
Yeah.
Okay, you got to get a business license, and you don't want to go to prison. Okay,
He's not in prison.
and go to that
What is
special
your first time?
prison
Like, come on.
that what's the name went to? Who's Little Nas went to? That special prison?
Right.
Yeah, you might end up at that prison. Okay,
Wait, what prison? What
never
prison?
mind.
Oh, Lord.
Anyway, so they do send people to prison. They go to jail for evading taxes. Now, here's one thing. I didn't actually talk about in my other classes, but this is actually pretty scary. Over the last, it's not so much recently, but like at the last, like 2012, I know this, there was a story, this old lady, she owed money on her house. She has fixed income. Stay away. She has fixed income. Her house is paid off. Okay? But you still have to pay taxes every year. But the problem is, she didn't know that they increased her taxes. So she owed a big chunk of money. Because it's on back taxes. And what happened is, without her understanding and, you know, and knowing what's going on, they auctioned her house out from underneath her. Even though that her house was paid for, because she owed some taxes. And it wasn't even that much either.
That's all it was.
Exactly. So, you, the next generation, is going to be knowledgeable that you have to make sure you're paying your taxes. You have to make sure, and when people say, hey, let's vote for these programs, everyone needs all this. This last, what's that check, the stimulus check? The last one, listen, I did the math on the last one that I got. It wasn't, it might have been last year or the year before. Okay, I don't get one all the time. So, on the last one I got, my wife and I got $2,300.
Damn.
That's what they were giving me. They're giving like 200.
Yeah, but that's my wife and I, we got $2,300. Great, yay. I did the math. For the amount of money the government spent to send out all these
Stimulus checks.
stimulus checks to everyone and all the programs that they did with it, divide the amount by the number of people that pay taxes in America. I did that. They sent checks to people that don't even pay taxes. But they still got a check. And so by doing that, that $2,300 over the long term, in total, is going to cost me $8,000.
Wait.
You're gonna pay
Because
taxes back on the state.
I got in a car accident recently, and I'm gonna get money when I turn 18. Well, like that's still like count that I'm gonna have to pay back.
Okay, say it one more time.
I got into a car accident, and like
That's not going to, yeah, that's different.
I don't have to pay anything.
No, because that's part of a settlement.
Okay.
Okay,
No,
you
that's
know,
what I'm saying.
read that guy with the billboard, need cash now. Anyway. But does that make sense now? Okay? So, they spent so much money and they gave so much money away, that's eventually going to pay, I'm going to have to pay it back somehow. $8,000 worth. So when it's time to actually say, voting for all these programs and all these great things, yes, it sounds good, who's paying for it? Who's paying for it?
Taxes.
Every time that they talking about, hey, all these great things, who's paying for it? Exactly. Again, I'm not trying to push my political leanings. I said at the beginning, I'm just saying, you guys need to be financially accountable because this is one of the things that you're going to have to take care of. See, I'm out. 5 more years. That's it. I'm done. I'm going to early retirement. I'm going to go work on my other hustles.
Aren't you lucky?
Okay? I'm also 45 years old. So that's going to put me at 50, and then I am just going to work on the other hustles.
45?
You're 45?
Yeah.
No,
You don't look.
Okay.
You're not for like 53.
The oldest kid is like 18 though, and then I'm like.
No, oldest. That's youngest.
Oh, younger. I mean younger. The youngest kid's like 18. That's why I was like, how old is he?
What do you mean? It looks like
No,
he's
that
30.
doesn't make any sense. You don't look
Thank
your
you,
age.
thank you. Okay, listen, moisturize. Okay, when you're done, okay,
So wear
just moisturize.
sunscreen.
He makes a YouTube video of his skin.
I know this YouTube video is going to be lit later. All right, anyway. So my point is, for the deductions that we're talking about, you're either going to take the standard deduction, which I told you guys all to do anyway, because it's going to be more than the itemized deduction in your case, because you guys don't have these things. I have all these things right here, so my itemized deduction is going to be more than the standard deduction. And the standard deduction is actually a lot. We're going to go over it here in the next problem.
It is a lot.
It hurts.
So right here, taxable income is adjusted income minus deductions. So I'm gonna highlight things as we go to see what's what. Yeah, there we go. I'll do that one. Says Angelo earned wages of $63,500.
Is that just gross?
He's earning it, right?
Yeah.
So this goes in which category?
Or gross?
Gross. Very good. This is going to go in gross. So that's going to go in gross. Receive $1,850 in interest from savings. So is that, it's over here.
That's the adjustment.
He received this money though from a savings account. Okay? So he received that. So is that is income, right?
Yeah.
I have to claim that. And he received $15,000 in winnings on television game show. Okay, that's good, right? So that's part of the gross. That's part of his income. The next thing he says, contributed. So that means that person, Angelo, took from his money and put it somewhere. When you're contributing something, you are taking it and you are giving it somewhere else. You're sending it away. So it's going to not be part of gross. So this next thing, okay, contributed $7,800 to a tax-deferred savings plan. So what category should that one be in?
The deductions?
Not deductions. It's an adjustment. It's an adjustment because he's going to pay taxes on it later. Adjustments are things that he pays on later. He is entitled to a standard deduction. So now we're going to talk about deductions. He's entitled to a standard deduction of, right there, $12,550. That's standard. The interest on his home. So now we're looking at other deductions. These are itemizing the deductions. Interest on the home. He paid this much in property taxes, this in the state taxes, contributed $3,000 to charity. So all this right here in orange is part of deductions. So the first thing I'm going to do is start with my step one, gross. And how do I figure out the gross?
Adding together.
Add them all up. So in this case, I'm adding 63,500 plus 1,850 plus 15,000.
Oh, wait, hold on.
I know you guys are calculating for me. I appreciate that. Because people that are not calculating are just sitting there like a bump on the log.
I forgot. 0 and 15,000. Okay, 80, 30, 50.
80350.
Yep.
And this is gross. So when we get to the homework problems, you're going to have to do the gross problem. There's going to be gross, and then you do adjusted gross, and then you do taxable. Determine his adjusted gross. We said he had an adjustment, didn't he? Adjustments are things that he pays taxes on later. So I'm gonna take my gross, which was
7,800.
80
Oh,
0.
minus, what was the adjustment?
7,800.
7,800 right there.
$72, $550.
Okay. Now, before we get too far into this, I'm going to show you the reason why. Okay, before we actually start doing the tax code and all that other stuff, let's say he pays 10% tax on 80,350. 10%, I would just move the decimal point over 1, and he would have to pay $8,035 in taxes. That would be 10% tax. That's what he would owe. But after we adjust it, what's 10% of this? 7,255. Is that less? It is less. So do I want adjustments?
Yes.
I want adjustments. Do I want deductions? I do want deductions. So I'm going to do my best to get my taxable income down. Where are we at? Determine his taxable income. But before we do that, off to the side, we're going to have to try to do this first. Let's go before. Standard deduction. Or itemize. Standard deduction, he had 12,000, was it 550? Okay, that's the standard deduction. Now, let's look at the itemized. What he's going to take away if he has itemized?
Mortgage, property.
Okay, so what was the mortgage?
It was 6,500.
6,500?
Yeah.
Yeah.
2,100 on property tax.
What's the next one?
2,100 on property tax.
And the 1855 estate.
1855 estate
And then 3,000 to charity.
and 3,000 charity?
Yep.
Okay. What do you think I should do with those?
Adam.
Add those together. We're going to add those together now.
$10,455.
10,000?
No.
Are you sure?
I
Yeah.
got 13,
Oh, close enough. 13, sorry.
13,455.
Yeah, forgetting zeros.
There we go. So, or being the key word. Remember how I said I want my number to go down? I want my taxable income to go down. So which one should I use?
Standard.
And
Say use a higher.
Itemized.
The higher. So I want itemized. I always want to use the bigger number. I want to use the bigger number, always. Okay? Were you, I thought you were right here on this. You ready? If I pay 10% tax on 80,000, what would it be?
8,035.
Very good, right? So if that's 10% tax on that, right? But after this adjustment, if I pay 10% tax on this,
we're gonna be 7,000.
7,200.
so would you rather owe the $8,000 in taxes or $72.55 in taxes?
22.
So the whole point of this game is to
Get the lowest.
get the lowest taxable amount. So if right here. So I'm either going to deduct the standard deduction or the itemized deduction. I'm going to take the larger of the two. And just so you know, when you do itemized, it is more complicated and there is a different filing fee. So when you're filing taxes, okay, you have someone doing it, they're doing itemized, usually filing fees, it costs more. But it helps. Now, his taxable income. So we go to the adjusted, which was what? 72.
Yeah, 50.
72, 5.
Minus deductions. What was the total deductions I'm going to subtract?
12, 12, wait, 13. Oh, 13, 4.
13.4?
13, 4.
Okay.
13455.
13. Come on now. Like that? So now my taxable income is going to be
59,095.
5.9.
095.
Now, let's go back to the statement that I said. Hypothetically, if we end up paying 10% tax, which is, I keep saying that because there's a thing called a flat tax, which our government is trying to go to, or they were for a time. Everyone just pays 10% instead of this whole mess that they have. You'll see the mess here in a minute. This would only be $5,910, right? It's a lot less than what we had originally, right? Okay, so you want this number to be smaller. That's the whole point of the game. So, what I'm going to do at this point is I'm going to pause this one. We're going to do another example after about like 10, 12 minutes of this, and then I'm going to leave off for today. I don't want to actually get too far into this because this is a mess, the next example.
It's a lot to get right.
Hey, do you know what? I think these conversations were actually good. All right, everyone see this chart right here? Guess what? We're not going to do this right now.
Yay!
So what we are going to do is, off to the side, I need to explain how to do the math on this chart first before we even attempt this chart. All right, so I need an example. So I'm going to have Luke. Luke is my example here. Okay. Luke, in all his grandeur, he is pimping.
Oh.
He only made $25,000.
Oh, dude. Roughing it. Just living day by paycheck by paycheck.
Right? Okay. Now, let's figure out how his taxes are going to work out. So this is a tiered system. Think of it as an overflow. What happens when you overflow something? It carries over, right? So if you have an overflow set up, it's going to go into another container. So if you know the first container is going to overflow, hopefully it's going to flow into the next one. And that's what we're doing. So what we have here, the 10% bracket, is between 0 and 9, was it 550?
950.
550?
950.
It's not 950.
950.
Huh?
It's 950.
9950.
9950?
Yes.
Okay, thank you. Sorry.
Nine.
9950.
Going through it, Pacho.
There we go. 9950.
Did you actually start recording again?
Yes, I did.
Okay.
Now, the next category is a 12% tax, which is your 12% on your 9951 through
40.
40.
525. 525.
525?
These are hard to see, Bosh.
Yeah.
I know. And that's why when we do this, I'm actually going to have a actual sheet handed to you. But this is part of the notes, so just go with it. So in these categories, Luke falls somewhere at the 12% range, right?
Right.
Okay, good. So the first thing we have to do is we take my $25,000, subtract my first tier, the first bracket, which is my 9950.
Oh, 10,
Yeah, I'm waiting for you guys.
1550.
1550?
Yeah. Well, 15050.
Okay.
15K 50.
There we go, like that.
Good job, Pacho.
Thank you. Since he is not making over the 40,000, that means he doesn't have anything flowing over into the next group. This is what the tiered system is. So according to this, he's going to pay 10% tax. So it's 10%, so it's going to be my 9950 times my 0.10. He's going to pay this much tax on his first amount. But then, how much is left over in the second group? 1550, right?
Yes.
So this is the overflow that goes into my second group. So his 1550 is going to be 12%. So what we have here is a tiered tax system. And that's the reason why part of our tax brackets and all these things are super annoying. And people playing on their phone during the class is also annoying. But ain't no one here would do that. So, 10% right here is going to give me $950, right?
995.
Yeah. Now, 12% of my 1550 is going to be
1806.
1806. So because this is a tiered system, his first 9,950, he's going to pay this much on that. The next group, he's going to pay this much. All of our system in our tax code is tiered. So total, Luke is going to pay how much?
2,801.
That's how much Luke has to pay.
Damn.
Because,
Spending taxes.
yeah, that's a lot in taxes, right? You didn't really make that much, did you?
No.
25,000 isn't that much, but you're still gonna have to pay almost 3,000 in taxes. That's how it works. Tiered system. Okay.
Government sucks.
Now, you guys? Now, one of the things. So this kind of goes with the crackhead stories. I'll go back to this problem right here. We want the most deductions.
Right.
Most deductions, right? Okay, crackhead stories. How is it possible for someone to make $1 billion and pay no taxes?
They have to steal it.
It's not.
It's not stolen.
Oh,
Don't.
isn't it,
I mean, unless
donations? No, oh, it is?
That's one of them.
Charity.
That's one of them.
Churches.
That, one of them. Same thing. They're all the donations, charity, churches. What is this up
a
here?
gift.
What did I deduct on this one?
Winnings of.
Where did this 13,455 come from?
taxes?
The deduction.
My deductions. So we say that person right there made $1 billion, but paid no taxes. You're able to do that if you can get your deductions
To match your income.
to be bigger than your gross.
How do you do with deductions?
I will show you right here.
Self-employment.
So we say self-employment, but in all actuality,
You're still working.
you take money, let's say Jeff Bezos, Amazon, okay, in 2020,
And you're paying.
went from $2 billion to $200 billion now. Didn't pay taxes for 2 years. You know why? Didn't have to.
So,
What happened in between now and then that he could legally not have to pay taxes?
All of the money that you put towards this business counts.
Put it towards your business. So, where people get mad at these billionaires, but what did he do? In that time, they opened up a Goodyear distribution, a Paradise Valley distribution, hired 30,000 more people, bought trucks, bought equipment, did all these things, invested in the business. So, would you rather that person, the billionaire, to give the money to the government, where you know where that's going to end up at,
right.
or for that billionaire to get you a job, a good paying job, a
The
decent
ability
paying
to
job?
get a job.
And that's the point. We want people with the money to make jobs for people to make more money. Because what's going to happen if you make money? You have a job, you pay taxes also. So we want those people to invest in the economy by making jobs. That's important there. All right, so we'll do more Crackhead Tales tomorrow.